for our next section, we're going to do a pretty deep dive into what we mean by systemic cyber risk. So it is my pleasure to introduce Jay Healey, Senior Research Scholar at Columbia University, Wendell Snyder, the CEO of Thistle Technologies, and Jonathan Welburn, an operations researcher at the RAND Corporation. And moderating our next session is our very own, one of my favorite colleagues, they're all my favorites, David Forscey, Managing Director of the Aspen Cybersecurity Group. Over to you, David.
Thank you, Vivian. I'm so happy right now for so many reasons. Not only because this is the first in-person meeting I've been to, I think many of us have been to in almost 2 years, many of us too, but I get to talk about the cybers with three of the smartest people, who I believe the smartest people in the field. And so let's just get into it. So first, the hardest question. Are cyber attacks getting worse? Is it an illusion? Is it the way we cover them? Or are we really entering a new phase where new pieces of critical infrastructure are coming under attack in new ways? So I'm going to put that to all of you. Jonathan, why don't you go first?
Yeah, great question. I think we all feel like it's definitely getting a lot worse. I would say on that a lot of that attention comes on ransomware, and for good reason. I think that the ransomware attackers have found a perfectly successful, illegitimate business model, and every time there's a large-scale attack, and with Colonial, we see that they issue a payment and it solves the problem. It's a really good advertisement for that business model. So I think that we're seeing more of those brazen attacks where they're willing to go after large targets, which can get a large sum of money.
I would say that in addition to the attacks being demonstrated successful, that we've also got this growing complexity and growing interdependence. And so the opportunities are growing faster than we are able to mitigate them as an industry.
Yeah, and I love both of those. And so we've been here before. 20 years ago, say from the late 90s to up to maybe 2003, it was relatively routine to see large-scale attacks take down substantial parts of the internet, right? They went by NIMDA, Code Red, SQL Slammer, Melissa, I Love You, right? Almost every quarter, we would just be awash with a worm that would disrupt substantial parts of the internet. So we've been here. And so what's changed is, well, one, we haven't changed, right? Most of the reasons that let those worms spread so quickly and take down so much, we haven't really mitigated in a substantial way. Well, yes, we have, and Microsoft has made big changes, others have made big changes, but a lot of the fundamental vulnerabilities are still there. I love the points about interdependence and monetization that have come up. But we've also seen changes in adversary behavior. I think things that we thought adversaries, not just, but particularly nation states, we would say, well, folks just aren't going to go past this line. And we've just continued to see that over the past 20 years.
So one of the scariest things about ransomware, obviously, is that people are using shared vulnerabilities among many systems to launch a single attack that affects many, many individuals across the system, right? Mm-hmm. One of the reasons why the theme of this summit is systemic risk. So Jay, going back to you real quick, how do we define systemic risk, especially in a digital society? What is systemic cyber risk?
You can think about it as if you've got a system facility asset, if you're an entity, a company, your importance to the system is greater than just what you have to yourself. The work that I started doing in this, we were looking at correlations of cyber risk, and some WAG started calling it, this 2014, cyber subprime. Like, the last thing we need is another cyber this or a cyber that, referring to the 2008-2009 credit crunch. And the more I thought about it, the more I thought, it's actually a fabulous analogy. Because going into the credit crunch, you had these pools of risk, right? You had this financial risk that was pooling in places that was misunderstood, not understood, and it had this cascading effect when it finally broke. And the more expert you were, the more that you would have said, it is impossible that these risks are correlated. And so it's up to us on the cyber side to say, all right, well, where do we have these IT companies that are too big to fail, if you accept that part of the analogy? We've got common mode failures or common cause failures. And we saw this in SolarWinds, right, where everybody is using the same software, and an issue with that piece of IT will affect everyone. We see cyber cascading failures. Just this week, there's a big outage of Amazon Web Services. Right, so something happens to this piece of IT infrastructure that then affects many, many others in the real economy. And we've got these physical cascades, like we saw with Colonial Pipeline. It's a cyber incident, in this case ransomware, and the cascade wasn't on the cyber side, it was on the physical side because we didn't have enough fuel in the Northeast.
So Window, so we just got kind of a theoretical treatment of systemic risk. What are some practical examples of how systemic risk manifests that you can think of?
Sure. So on the critical infrastructure side, there was an attack on Dyn that took them down for a while. It was a denial of service attack. And the set of folks who depend on Dyn went down, and that's
for our
reasonable
audience,
to
could you just
expect.
explain what Dyn is?
Oh, it's a DNS provider. So that's critical in an obvious way. If you can't find your way to the server, then the server's not available to you. And so that goes down and their customers go down, and that's expected. But what's not expected is the number of customers that depend on those customers and the number of customers that depend on those customers. And eventually, we recognize the interdependency of all of these cloud services that might not be directly relying on Dyn, but are relying on somebody who's relying on Dyn. And then you take a company like Slack, which you might not recognize as critical infrastructure, but all these different cloud service providers are using Slack as their communication mechanism for operations. And so when Dyn goes down and Slack depends on Dyn, and Slack's not available, and Slack is what everyone else is using to manage their operations and try and recover from an outage and move to a different provider on short notice, and their communication channel is down, we have all of these interdependencies and failures that pop up in unexpected ways. At this point, I'm hoping all those folks have a back-end IRC server or something to address that, or maybe just phone numbers, but on a piece of paper written down, anything. But it really revealed, that one in particular really revealed our interdependency in the cloud. But we have similar interdependencies in technology. Whether it's a library that's widespread, like OpenSSL, when Heartbleed came out, and we saw how many people were scrambling to find all the different places that specific library was incorporated into the technologies that their organization depended on. So whether you are a product developer and you recognize that you've got it incorporated over here, actually, you also have it in this part of your product, or you're a CISO and you're trying to figure out, for all the different products I have, which of these are using it, and the answer was essentially all of them. Trying to even address this specific vulnerability in your infrastructure was just a can of worms, and everywhere you looked, you found another technology that was dependent on this specific issue. And this is a technology that's probably one of the most inspected by security researchers out there. So imagine all of these other technologies, all these other libraries or components that have vulnerability to the same degree or to a much more significant degree that is not getting that same level of inspection and that is vulnerable in a way that's quiet. Or like SolarWinds, a technology that we're deploying in a lot of critical places that is compromised, and a legitimate update is pushed with malware inside of it, and now we've got this problem deployed everywhere. So the core problem here is complexity and our interdependence. And that is something that we're not going to move away from, because that is providing us flexibility and functionality and all these other critical functions that we need. So we've got a growing problem here.
Jay, before I come to you, Jonathan,
Yeah, thanks. And if I could just build on Windows' fabulous points, like look at SolarWinds, right? It's a big company, right? It's got IT security, like it's a large entity, it's a large organization, and compare that to one of the other ones you said, Heartbleed, right? It was working on the OpenSSL, and how many developers are working on OpenSSL, right? I mean, a dozen, 24 contributors, main contributors, and it is absolutely critical to web commerce, right? I mean, you're just not able to do so much, and it had this unknown dependency. And so we have to worry about these hidden pools of risk that can be large companies that everybody in IT knows, to these critical pieces that are just maintained by a handful of important people, and yet underpin everything that we're doing on the internet.
So we've got a lot of dependencies we're talking about. We've got the domain name system, open source infrastructure, suppliers. How do we actually identify where we should be paying the most attention? Jonathan, I know you've done a lot of work on this. How do you measure systemic risk, and how do you identify the pain points, the single points of failure where we could have a cascading effect begin?
Yeah, it's a great question. So, first of all, it's definitely a difficult problem, and acknowledging why it's difficult before I explain how to get into solutions is, typically when you want to look at different types of risk, you might say, let's look at historical data. Let's see what the past incidents have been. And when we do that for cyber, when we look at systemic cyber risk, the incidents that we may be observing in the past are just a part of a larger distribution. And so we know that we're not necessarily seeing the full distribution. And there might be different reasons for that. There can be underreporting. That could be one reason why we aren't able to observe everything. But another problem is it just might not have happened yet. So we've seen a lot of large cyber incidents, like some of the ones that we've discussed, SolarWinds and Dyn. But those might not be the worst of what Jay was actually talking about when he was defining systemic cyber risk. And so actually getting into measuring what could pose that type of systemic cyber risk probably requires a different approach, which is more in the modeling, the simulation, and the hypotheticals. And one of the approaches that I've been doing, work I've been doing with colleague Aaron Strong and the broader team at RAND, has been kind of following the way window that you were describing Dyn, right? Where you have where they go down, but they have this list of customers, and then there's those knock-on effects, and it kind of cascades out through these networks. Well, saying if we are able to start getting into that network structure a little bit more, and seeing who depends on Dyn, who depends on Box or something was hit. The different companies are hit after that. Who depends on Box after that? And trying to understand that network structure. Well, at that point, you can start asking the hypotheticals. Well, what happens if there is this type of cyber incident at this given company, this given service? How would that then ripple out? What would the aggregate impacts be? And that's an approach for starting to answer this question of how do you measure the potential systemic risk posed by a given company or service. It's only part of it. I think there's a lot of other things like what Jay was talking about when you're getting into code repositories and there's where there's things which are widely shared across many other across many services and products that would be really difficult to measure.
Do either of you want to add to that?
Just that Jonathan's work and the work that RAND has done, it's been really groundbreaking. It's really changed how I look at this.
So a lot of the way we approach cybersecurity as a society, as a government, norms building is based on individual defense, right? Mm-hmm. So let's figure out how to make sure company X does Y to protect their own data, right? But what you're describing here seems to require a different approach, right? Because a lot of the risk is outside of the perimeter of the individual company, right? So what does it mean to actually, how do we change our approach to prioritize systemic defense instead of just individual defense? And let's start with you, Jay, and then go down the line.
Yeah, I mean, there's a couple of different ways we can do it, right? We've been looking at other kinds of systemic risk, right? We've handled this for the energy sector and for the finance sector, for example, because we've said you need to be regulated because your risks are higher. In the finance sector, where I had partially come from, Goldman Sachs and other banks would be called a globally systemically important bank based on a relatively simple set of criteria. How large are you, how interconnected are you, how leveraged are you, and things like that. And therefore, you had a much larger role in the system, and if you went down, you have global regulations that you have to fit, not only your national regulator. And so in those places where we've got existing regulation, we can look at, all right, for those sectors, how might the government use those existing regulations? But in other places, most especially within the IT sector, we don't have such regulations in place, and it's hard to get our heads around, well, how would you quite regulate to be able to get there? You might say regulate for notification, and we've been seeing a lot coming up in Congress on that. If you are affected, Colonial Pipeline, SolarWinds, you need to tell the government so that we can at least understand what's happening. And the last idea that I really liked, it came out very strongly from the Cyberspace Solarium Commission, which Director Easterly mentioned earlier this morning, where they had an idea. It had the kind of unfortunate name of SICI, Systemically Important Critical Infrastructure, and saying, boy, some of these entities in critical infrastructure really do have a larger systemic importance. And that's both to say, if something happens, the impact is really bad, emphasizing the negative aspect. But I liked it because they also emphasized the positive side. These are the partners that the government can most work with to mitigate systemic risk. And I like both parts of that, and I'm really pleased to see that CISA has a systemic cyber risk reduction venture that they're doing within the NRNC.
Linda?
I think regulatory involvement is required, but we need to recognize that it only operates at a lower threshold, right? That it knocks out kind of the low-hanging fruit, which is important because there are a lot of organizations that haven't even gone that far. But the attackers are more sophisticated than that, and I don't know that it's going to address the larger scale problems that we have. And this is kind of getting to the area that I think is the biggest monster under the bed as far as I'm concerned. That imagine all the attacks that we just described have been happening for 20 plus years, and we just didn't do anything as an industry. We didn't implement better technologies. We didn't get better at mitigating these strategies. We didn't reduce our attack surface. We didn't work on memory corruption issues. We didn't do any of the work to harden these systems that we rely on and develop resilience into these systems. And now you've got the device space. And in the device space, which is growing in complexity and growing in our dependence on these devices is also growing. We've got.
Can you just say like what devices, what kind of devices you mean?
Sure, automotive, aeronautics, manufacturing equipment, corporate devices like printers and security cameras, your refrigerator, everything. I mean, literally everything is essentially has a computer in it. And for a completely reasonable set of decisions, you try to reduce, as a device manufacturer, you try to reduce the complexity in these devices because you want them to be highly reliable. So you pare down your system to just the critical functionality. But a lot of them either have operating systems that are so tiny that they don't have security mechanisms that we've leveraged in general purpose operating systems for the last 20 years, or they didn't bother to build it in. And a lot of them don't have privilege separation, and a lot of them don't have separation between code and execution. And you end up with a device that has all of the opportunity that the general purpose devices, whether it's in the data center, or it's your workstation, or even your, at this point I'm going to call your mobile phone more of a general purpose device and less of an embedded device, just because they have so much functionality and so much security work goes into those OSs. But you end up with a device that's sitting on the network, has access to critical networks and systems in your corporate environment, in your government environment, and then didn't do any of the security work that general purpose operating systems have been doing for 20 years. And so how do we get to a place where we are able to make those devices as resilient as these general purpose operating systems, given that they have the same risks, but are much more resource constrained than the general purpose operating systems, because a lot of these devices are not plugged into a wall, and a lot of these devices don't have the same amount of memory or storage or CPU capabilities. So to implement security functions in these devices is a different challenge. But it's a huge opportunity for attackers, and it's very difficult for the people who manage these devices to be able to even inspect these devices and recognize whether they are actually compromised or are using the code that we intended for them to run at deployment. So that's the big hairy monster under the bed for me. And if we're going to take on something as an industry and say that there's something appropriate that needs to happen here, then being able to update those devices effectively, so when a vulnerability is identified, that we can actually do something about it. And updating devices is harder than updating general purpose operating systems or your web browser, for example, because the failure of an update for your web browser means that maybe you have to try it again, or you have to reboot your system at the worst, whereas the failure of a device could mean that somebody has to go out with a USB plug onto the manufacturing floor and update it manually, or maybe somebody has to go visit thousands of ATMs all over the US and address them individually. Or maybe it means that that satellite is just gone for good, right? Updating a device is a much more risky endeavor, but it means that it's much harder to address the security issues that we know about already in devices. And it's not unreasonable that the device manufacturers are reluctant to deploy those kinds of updates, knowing that what failure means for availability for the folks who depend on them.
So in other words, we have billions of devices that are too simple to have good security.
No.
No? Okay.
That don't have good security yet. They absolutely can, but we have to make that a priority.
Right.
And if I can, one of the implications of this, remember when I said 20 years ago we kept having these major worms that were hitting? Well, the worms were only taking down things made of silicon and things made of ones and zeros. Because that's all that was really on the internet. Because of this trend that Window just talked about, right? Now we have the attacks, and they're not just taking things down made of silicon and ones and zeros. They can take down things made of concrete and steel. So it was really difficult to really hurt someone or kill someone when all you were disrupting was silicon and ones and zeros. Now that we're taking down can take down concrete and steel and these other devices that Window just talked about, right? I think we're going to look back at the 2000s and the 2010s as the golden age when no one was really dying from this stuff. Because now you can have these systemic attacks that have a much lower threshold of the kind of adversary that can have these kinds of capabilities that really can be a matter of life and death, and will be if they haven't already.
Well, we know a delay of medical care by X amount of time increases mortality rates by X amount of time, and what, two-thirds of the NHS system in the United Kingdom went down during, was it WannaCry? Right?
Substantial with WannaCry, yeah.
So, Jonathan, we've talked about, do you have anything to add, or would you like to go back to how we can actually manage this? Or?
I'll add to this and maybe wander that direction. So I think it's really interesting listening to Window's points, because there's this kind of irony to this, where the objective of all of these devices, of really fundamentally the internet in itself is interconnectedness, right? And I think that it's been a lot of these products have done a great job at that task. I think that as you were talking about how this is the first time we're at a conference or a live event in 2 years. I mean, we've gotten on pretty well due to how well interconnected we are through a lot of these devices and services. But the irony of that is that we're here talking about how these are really too interconnected to fail, and that how they pose a systemic risk if they were to. I love a good finance metaphor, as Jay was making several, and maybe following on some of Jay's finance metaphors, I think that I wasn't in the room when they came up with the term "sickie" and the solarium, and it sounds silly, but I imagine if I could peer into their head, I imagine they were following the SIFI reference, SIFI, sickie, which I love that the idea behind that, and that there was a lot of lessons that we could learn from all of the previous work that's been done on systemic risk. So I just want to make a point on this of, perhaps where systemic cyber risk is similar to systemic risk, and also where it's different. I think that with all of the work that had been done by academics, by analysts, by policymakers following 2008 and before too, about what it meant to be systemically important, there were there's a lot of great things where Goldman becomes systemically important, where you're saying that due to the interconnectedness of this entity, due to of this institution in that context, due to the complexity of this institution, if it were to fail, how difficult would it be to unwind it? Due to the substitutability as well. These are three general types of criteria that you could say would help you understand.
Sorry, could you just say a little bit more about substitutability?
Substitutability meaning, how easy would it be if this institution failed to for its assets to shift to another, or replace its service with another?
If one cloud failure happens, you can switch to another cloud provider.
Exactly, yeah. How easily can you switch to another cloud provider? So in this context, and that's exactly right, because we can carry some of those points forward into thinking about how to identify and how to manage systemic cyber risk in the systemically important cyber whatever SICI that we're calling it. So I think those are great points that we can carry forward. Another one too, actually, is that systemic risk, whether it be in finance, environment, or cyber, or elsewhere, is inherently a multi-stakeholder problem where you can't easily manage this problem by yourself as one organization at a time. Obviously, you can do the multi-factor authentication that Assistant Director Easterly was talking about before. Great way to actually move the ball forward. But when we're talking about systemic risk, it's not up to one organization, being a firm or being one agency in government. It really does require a lot of broader cooperation to actually tackle this type of problem. And so it's exciting to hear more discussions about that, a lot of interagency discussion, and to have the various folks in the room that we're all talking is really the right direction.
So I want to go back to, were you going to say something else?
I was going to say how they're different.
Okay, right, great.
So one point about how they're different is that systemic risk in economics and finance is caused by, it's not exactly one group's fault. It is often caused by, you could call it misaligned capital, that's excessive capital in one area of the economy that's overly risky, and you get a crisis. Systemic cyber risk is not that. It is an adversarial type of problem. It's fundamentally caused by it can be caused by a group or an individual which targets the right entity at the right time.
And that also means that the intelligent adversary can circumvent all the risk management practices you put into place that, you can't pass a Dodd-Frank to prevent an attacker from leveraging an attack on DNS infrastructure, things like that. I want to go back to regulation real quick. Devil's advocate here. The free market creates all the incentives you need, all the incentives that companies need to prevent a systemic shock. They have every interest in preventing a systemic shock. So get your big government out of here. Why do you need to regulate that? It's one thing if you're regulating data protection, where maybe they actually don't have an incentive to protect customer data. But why would we need to regulate systemic resilience when it's in everyone's interest to be resilient? And start with you, Jay, and then come back down.
Oh, go ahead, Wendy.
Go ahead, Wendy.
So as a former CISO, one of the problems that I ran up against frequently was trying to identify which of the technologies in my organization had incorporated this other technology that was vulnerable, like the OpenSSL example that I just gave. The bill of materials would make it easier for organizations to identify where they are vulnerable when new vulnerabilities are identified.
Could you say what a bill of materials is?
Letting us know which technologies are incorporated into the technologies that you trust. And
like an ingredients list.
Like an ingredients list, yeah. And so one of the things that I don't think that industry is going to do this necessarily by themselves if there isn't some regulatory requirement. A lot of folks don't want to identify all this attack surface that they may have. They don't want to necessarily reveal that they are vulnerable when a vulnerability is identified in one of these components until they're ready to, until they have a patch available, et cetera. There are a lot of factors here that are working against that aspect of transparency. But from the CISO's perspective, it's a lot easier to mitigate the issue if you know about it, even if you don't have a patch available from the vendor. And while there are organizations that are not going to be able to jump in front of it and do something about it because that information is available, and you are giving the attackers a laundry list of places to go shopping when they've got a vulnerability in hand, and they can wait to just be opportunistic about these issues when they're identified by somebody else. They don't even have to do the work. They can just wait, and a security researcher will be able to do that work for them. And this gives them an opportunity of places to go deploy that. And it takes a lot of time for us to address these issues, to mitigate them, et cetera. But I can't do anything if I don't know it's there. So either the burden is on each organization to reverse engineer every single technology that they're using in order to understand all the other technologies that they're using, which that's completely undoable, or for us to regulate, understanding how all these technologies are interdependent so that we have a chance of being able to mitigate them or turn something off when we know that there is a serious issue that we may or may not have a patch available yet from the vendor.
So promoting software transparency through regulation. Right.
That's one thing.
Jay, were you going to say something?
And that's a phrase that I use a lot, and I love that we got there. To me, if you're going to have to regulate, I want to regulate for transparency. Right? If we regulate for security, there's much too great a chance that we're going to lock in some kind of, like, even if we say you must have two-factor, well, we're already starting to move past two-factor in a lot of advanced places. And so, but if you regulate for transparency, well, now you can allow the market to try and work better. And not just the market, but we can allow other aspects of American society and capitalism to work better. An example, the SEC originally had guidance that said if you have a materially significant cyber incident, I don't care that it's cyber, it's materially significant and you have to tell your shareholders. Now that went from guidance, it became a regulation, there are still some gaps there, but they didn't say, the SEC didn't say your security has to be this tall to be on this ride. They said you have to treat this like any other risk and you have to tell your shareholders. Most of the way that we know about what's happened, well, a lot of the ways that we know and researchers like John knows about what's happened is through things like SEC reporting. So I love that. Is there other ways that we can get the shareholders, if companies are taking bad risks, then the main way we handle that as a society is saying, all right, well, the board of directors, on behalf of the shareholders, should be keeping the executives of that company to task if they're taking dumb risks. So I want to see, what can we do to reinforce that? For example, before Y2K, CalPERS, the biggest institutional investor in the world, I think, or close to it, went to every one of their companies and said, what are you doing for Y2K? You must tell us as an active shareholder. What can we do to try and tap in to those things to make it work? Frankly, and I'm interested in what Window thinks, right? I think of the large platforms, you've been seeing more stewardship of the larger set of problems. Right, sometimes for self-interest, like Microsoft in 2003, like that wave of worms that I talked about, ended in large part because Microsoft started to take this seriously. What I would like to see is a lot of the venture capital, a lot of the innovation is going into technology that works in the enterprise. And we had done some work at something called the New York Cyber Task Force that said, you don't get the leverage there, right? You've got to do it. But you actually do better in technology that helps across cyberspace as a whole.
What do you mean by leverage?
Yeah, like look at, for example, imagine we invented the perfect widget that is going to help protect against a wide range of attacks. We've got to sell 1 billion of those widgets to every organization that needs to be protected against the attack. They have to figure out how to configure it. They have to train people on how to do it. They have to keep it maintained and up to date. They have to keep it patched. They have to integrate it to the rest of their environment. If we can do one thing like end-to-end encryption, automated update, right? Those are things that got done once, and then it got to help 1 billion enterprises or people afterwards. And unfortunately, so much of the innovation is aiming that technology within the enterprise, and we're overlooking this technology across cyberspace as a whole. And just to close, we're also tending to ignore the operational innovations. We had to invent the idea of a chief information security officer, Steve Katz at Citibank in 1995. We had to invent the idea of an information sharing and analysis center in 1998, 1999. We had to invent the idea of a kill chain, right? We have there's the MITRE ATT&CK framework, right? That's just an idea. It's pretty much free, and yet it's been able to transform the way that we've been able to do defense. And so we do tend to underestimate those operational and those process innovations.
Window, then to Jonathan.
I'm going to add to that a little bit because we do have that widget. That widget is widespread. It's widely available. Everyone's already trained on it, and we can deploy it instantly, and that is delete. If you are
Delete?
Delete. It is delete, and it's available on every system that you use and every code base that you've got available to your desk. You can reduce the attack surface dramatically by getting rid of functionality that no longer serves your business needs. And doing that work to say, like, do we still need this, is a lot easier than trying to secure that mechanism that nobody's looking at. So deciding that that this is no longer critical functionality, and that we're going to reduce our attack surface by eliminating this, whatever this is. This could be a service, this could be a server, this could be an entire code base, this could be a legacy platform in your environment, this could be a feature that nobody is using. It's the easiest thing you could possibly do, because the vulnerabilities that are in that code, on that server, in that service, are not going to impact your environment if you do not deploy it, if you have deleted it. So I would say delete is that magical widget and that organizational structure that you're talking
And
about.
delete data, right? You don't have to worry about a breach for data that you're no longer.
No, we like
no
data.
longer
We
holding.
want the data.
No,
I don't want to delete it.
no, data's liability, get rid of it, you don't need it.
Jonathan?
I definitely want a lot more data.
What data? What kind of data do you want?
Okay, well, so I just to go on some of Jay's points, because I think that those go into the more data. We were able to start looking more into systemic risk and to discover potential companies which pose a systemic risk by using SEC disclosures. And so we're going into the weeds of the accounting standards 131 for those who care, and basically those are meant for companies to disclose relationships with other companies that they have, which might pose a significant risk. In my view, they're a little bit outdated, right? While we got a lot of data out of them, they are really thinking about those business relationships which could pose a large risk, which are themselves large relationships. So if you have a significant supplier that, if they stop delivering you with some raw materials and you're going to have a shutdown, then okay, cool. You need to disclose that on your annual filings. Your investors can know, policymakers can know, and then we can start understanding where systemic risk might be. With cyber, this is really out of date. I think that a lot of it can be a very small contract, which can pose a very large risk. If they have trusted access, privileged access, then that's something which should also be disclosed using the existing mechanisms. This doesn't need a cyber Dodd-Frank, although I think we should get there. But I think it doesn't need that for this point, where you can use the existing mechanisms to get a lot more of the information that we would need. And this is not full SBOM, but a part of the way there of telling you what key inputs are that could pose a systemic risk.
And I'd really like to foot stomp, especially for the government folks, when we want to so understand what happens with supply chain, and we're like, oh, we should regulate, we do X, Y, and Z. I've never heard of accounting standards and just some small changes to accounting standards to help us understand full supply chains. It's such a small change to an existing regulation, and I think it's just a brilliant idea.
Yeah, and the SEC has it. The SEC provides this data through their EDGAR system. It's something that we could run with actively with a small change in rules.
The only thing more riveting than accounting standards is insurance. So I want to talk about insurance. Why can't we just insure against these risks? If Amazon Web Services goes down and half the Fortune 500 goes down, well, they have insurance contracts, right? Why is that not the obvious free market solution here? Let's start with you, Jonathan.
Correlated risk?
What is that?
The fact that so many different companies in their insurance portfolio that they're insuring would all suffer losses at the exact same time, given a large AWS outage.
Are they ready for that?
I'm not going to speak for them. I have doubts.
I'd say for the consumers that have their information compromised when a service has been negligent in their duty to protect that information, that credit monitoring service isn't going to help them mitigate their risk of identity theft.
When I get to the White House in 2003, we're going to do insurance, and other risk transfer mechanisms are the way that it's going to happen. 18 years on, and insurance just has not, as great as the idea is, it has just not been able to bear the public policy weight that we're expecting for insurance. So hopefully we're going to get there. I think ransomware has really changed things up, and hopefully it can do better.
Last question before we wrap. What is, to you, your nightmare scenario when we think of a systemic shock? And then we're gonna go straight into Jay's point on how we can innovate in the cybersecurity field specifically.
That's ugly. I don't know. Who wants to take this first?
Critical vulnerability in a device that doesn't have an update mechanism.
That meant that billions of people.
That impacts lots of folks, whether it's
Right.
a car, it's an airplane, it's an MRI device. Like, That's my nightmare scenario. Critical vulnerability, being exploited in devices that don't have update mechanisms.
Jay?
Yeah, we're not treating the internet sustainably, to borrow the language from the environmental movement. Like our grandkids and their grandkids, there's no way they're going to have an internet that is as good as the one that we have today. I'm scared that the advantage that the Defender has had at the system-wide is going to go from them having the advantage to them having supremacy, right? Things can get a lot worse.
Okay, I'll add to it. There are things that we understand widely that are really critical: financial services, energy sector. If somebody came up with a clever way of getting into them, for example, to disrupt trades, and nobody notices it for 2 weeks or 3 weeks, it'd be a huge disaster.
Great. Well, on that cheery note, we're going to move on to the next panel.